All right, I'm going to give you a little quick trade review over this AUD NCD trade from the other day. So I call this my free Discord chat, link in the video description. So it could give us a nice move here. And like Shep said, 1 hour fair value gap lifts this morning, but that huge move yesterday, aka the reaction off that fair value gap, was the only thing that kind of turned me off to the play. But overall, higher time frame, so bullish on it. So this is what I'm talking about that kind of turned me off. But still, overall, I like to play because higher time frame, we're trading with the higher time frame trend. We got a higher time frame level, confirmation. We got several things lining up here. So still, it was worth the trade. So here's that daily chart. You can see the daily chart clearly bullish, clearly trending to the upside. Consistently putting in higher lows, consistently tagging highs, tagging new highs. So this is clearly bullish. And here's that larger time frame level. So right here, see that? That's a bullish order block. That's a daily bullish order block that we came down, tested, and got a nice bounce off of. So that was what we had on the daily chart. 4 hour chart, you can see you got a 4 hour bullish order block right here as well. So we have a larger time frame level. Price also retraced down into a discount. So if we take this low, because this was that swing low right before we had this really, really explosive move to the upside. So we're going to take this low to that high, find 50%. There's 50%. We traded below 50% equilibrium, 61% key Fibonacci as well. So we're in a discount. We tested our larger time frame level in a discount, which is what we want. And also we completely rebalanced this portion of price action. See that? That 4 hour fair value gap. See how we came down and we rebalanced that portion of price action, tested our larger time frame level, and we got a reaction. So now let's go to the 1 hour. You see on the 1 hour chart. So we came down again. Now this is just a split on the 1 hour chart. Let's just remove this 4 hour fair value gap now because we get the gist. We completely rebalance that portion of price action, which is very, very bullish. And then we got a reaction off of that level. This is that reaction. This is that displacement higher. See this? This is your fair value gap confirmation. See that? All right, let's plot it on there. You get your fair value gap confirmation, and that was, and at that point you got to set up. So we got to shift in market structure, fair value gap confirmation off of that larger time frame level. And then we got a retracement right here, which is when I entered on this retracement back down into a short-term discount. So we take this low now to that high. We find 50%. We traded below 50%. We got key Fibonacci 61% as well. And we had a few other interesting things down in this area. We had an 80 institutional price level, which I figured it was going to find support there because once we filled the fair value gap, you might be thinking, well, is it going to reverse right here? We just filled that fair value gap. That's a pretty random price point. That's 84. See that 84 level? Is it probably going to find support there? Likely not. It's going to want to find support off an institutional price level, off of a round number, 80. 80 is where it headed. And 80 was also right on this 1 hour bullish order block. Okay, this is a perfect example of price being fractal. Okay, this is, remember, price is fractal. What occurs on the higher time frame occurs on lower time frames. So you had a larger time frame order block. Here's your lower time frame 1 hour order block in a discount. It comes down, tested it. Okay, that's your entry. My stop on this was low of day, and my PT, my original PT, was right here. Now, and you might be seeing, well, did you bail early? Are you still holding it? So I've already bailed. I bailed yesterday right before New York close. Okay. So when we're dealing with pairs like AUD and CD, this is not a major currency pair. And with currency pairs that aren't majors, many times when you come to like New York close, that spread can get ugly. That spread can open up on you and it can screw you pretty bad. So typically I like to be out before New York close on pairs that aren't major currency pairs. Sometimes I will hold overnight as I have in the past, but the price has to be a ways away from my stop and my entry. I have to be up in the green really, really nicely. But something like this where it's already not a huge mover, I didn't want to hold through New York close, all right, and get screwed on the spread. It just wasn't worth it. I was green, I was up on the play, and that's how I played it. Okay, so I definitely set my PT a little bit aggressive on it. And I knew that it would have to move pretty aggressive to hit my PT. It just couldn't do it. And I mean, it's still looking good. Trend's still bullish on it. There's no signs of weakness at the moment. And I still think it's going to attack this high from what price is currently telling me. But yeah, you want to be with pairs that aren't majors, you want to be very careful holding through New York close because that spread can get you. Okay, so that was the play. Hopefully you guys enjoyed. If you did, leave a like, subscribe to the channel. I'll catch you later.